So today's podcast is going to be all about credit and credit scores. Jim's going to give us a full scope of what you need to watch for, what your ideal credit might be, and how to reestablish credit after it might have been damaged or you are trying to bring your credit score up. Stay tuned. We love to have you join us and learn
more. Welcome to the Close to Home podcast. Real people, real life, real stories. Insight and inspiration from Close to Home brings a fresh perspective on home, business, and life. Join the professionals across real estate, construction, insurance, and financial lending to gain perspective not only from their individual professional experience, but also from their life stories.
Good morning, everybody.
How's morning, Ashley.
Doing?
Good morning.
Doing well, Ashley. How are you?
I'm doing great. Somebody had a birthday this week.
Yep, she did. I saw it on Facebook.
The big 3-0.
Thank you. Thank you, Ashley.
Really?
No.
I feel like we went to a different party last year.
Yes. Yeah, my lovely husband announced to the Facebook world that how old I am, so there's no hiding that anymore.
Oh, well.
But did you
know
have
what?
A nice
you
birthday?
Made it, yeah.
Yes, it was good.
What'd you do for your birthday?
Just a dinner.
Dinner.
Yeah, this is not a milestone type of thing, and it's been a crazy year, so we're just
sometimes
simplistic.
Is good.
Yeah, for sure.
Yeah. So, and just, we've got family coming in town. So we're going to do like in the old days, my brother's birthday is like right before mine. And so we're going back old school and we're having a joint little birthday party that mama's throwing.
Right on. That's the best.
So, yeah.
Well, speaking of the birthday girl, today's podcast is brought to you by the birthday girl, Jacqueline Schmitz at Brightside Insurance Agency. Jacqueline is the owner as well as an agent. If you want to get in touch with her, the best way to do that is her cell phone, 636-346-7021, or you can email her at Jacqueline, JACLYN.Schmitz, SCHMITZ at brightsideinns.com, BRIGHTISIDEINS.com. That's Jacqueline.Schmitz at brightsideinns.com. So this week's topic is GEAM. We're going to be talking about credit scores and impact.
Hi, everybody. I'm Jim. We're going to talk to you today about some useful stuff. A lot of people have questions on this, and we're going to try to simplify it. But credit scores and the impact it could have on you. You're talking to somebody who's seen both sides of them, and I kind of know the treatment, which is not great when your credit needs a little bit of work. So let's delve in. So the first thing we're going to talk about is the scores. So they have a substantial impact on your life. We often underestimate the importance of our credentials. Those of us who've been impacted by a better understanding of some of the things that we're going to talk about here, but our goal is to eventually be a cash buyer. That's our goal for everybody here at Close to Home. But it's going to take us some time to get there. So everybody knows about my background, and I once had an attorney tell me, you don't need credit. You can just use cash. And, this was a long time ago. I took the hook. This was either ignorance on his part or a manufactured lie. Either way, he should have never told someone that you do not need good credit.
So I have a question. How old were you and how old was he when he said that?
I think I was 40, and I believe he would have probably been in his 70s.
Different world back then.
Yeah.
It was. And maybe this is a good trivia thing that I don't know the answer to, but I know it's been recent. Like credit scoring, at least in terms of like, is newer. Like
the rate at which you can improve it?
Well,
or
no, just in general. Like there was, and I don't want to misspeak, but I want to say it was the 60s, 50s. Like
So-
that wasn't a thing.
For me, I started at the in the industry at about the end of the 80s. And so that makes me also about 30. So,
Happy birthday, Jim.
thank you. I like the birthdays. The alternative is no good. So let's talk about that. So in about 1990-ish,
Okay.
hey, we got this new thing coming, this score credit model, and it came out. It rolled out.
So it was newer.
Yes,
Not, okay.
it was
So I was
about-
going to say, I thought it was.
There's about 90, 91.
Okay.
And that's the year, 1991. But it rolled out, and everybody said, this is just a giant mess. They retracted it. And then I want to say in about 95, 96, it rolled back out, and this time it stuck. And so that was the beginning of credit scoring, in my opinion.
Okay.
So previous to that, you would walk into your local bank. I mean, 40s, 50s, 60s, and you just say, "Hey, I want money, and here's what I make." And then now you can go on your phone and pull up your credit score, right?
Yeah, whole different thing. And it's my opinion, and I understand what happened with the banking and everything else, but I believe, and I don't want to contradict everything, but I think the handshake would have fared a little bit better than the scoring model as far as loans. When you actually sit and meet somebody face to face, and they call that a handshake loan now, and it is no longer, it's prohibited.
Right.
So, but you get to know the person, you know their business model, you know what they're going to do. You probably have a higher probability of success in your risk than just looking at this, almost as a computer would. Well, you don't fit the bid because here's what we see. Here's your credit score. Here's this. Here's that.
When you say it's prohibited, you mean like Fannie and Freddie prohibited, or
Our federal government compliance
really
prohibits anything that would constitute a handshake or preferential treatment.
Profiling.
Right.
Because I know you, I would lend you money. I would anyway. I'm telling you because I know how prudent you are. I mean, it's one of those
But
things.
you still got to run me through the model.
Well, we want to make sure you're not borrowing too much, and we want to discuss all that. But we can't do that anymore. It's
Gotcha.
That's the thing. One size does not fit all. Why? And
Right.
this is this new theory.
Well, and so you say credit scoring the way it is now came out mid-90s. So correct me if I'm wrong, but there's 3-ish different credit scores you can get? There's like a TransUnion, an Experian. What's the third?
Equifax.
Equifax. So do all three of them play into your score?
They do, and
Level it out, or
that is essentially the three repositories. So Equifax, Experian, and TransUnion, and those are the biggies.
So from what I remember seeing, like there's kind of they all have their different factors, but let's say that, one of them is a lot lower than the other two.
Oh, it happens.
Is that gonna like if I'm on the edge of qualifying for something where it's like good credit versus not good credit, is that gonna like mess it up or?
It could. Okay, so here's the thing. So let's suppose you have a low TransUnion score and you have a really high Equifax score. Okay. So for me, and as far as your house buying, no, that's not going to affect you because we throw out the low score and we throw out the high score.
Oh, okay.
and is that only for homes, or is that for commercial deals too? Or
Well, commercial deals is, similar. They're going to look at it, as part of your model, but probably more weight given to, your plan, your pro forma, whatever you're going to. Anyway, so those are the three repositories, and we do that. Now, where it can affect you, as you were saying, if you go to Macy's and you apply for a card, but they're TransUnion driven, and that happens to be your low score, yeah, boom. Sorry, unfortunately, we can't lend you, or issue you a credit card, whatever it is. Request denied. So
And that's fine. You don't want store cards when you're buying a house,
yes,
right?
Yeah, please don't.
Don't go.
my
Nothing new.
opinion, if you're going to do a large purchase and they offer you a percentage to open a card, do it. But close it afterwards so that you can take advantage of the next deal. Isn't that bad? Sorry.
But I thought that hurt you. Like
He's
I
not
thought that
saying
hurt
like
your score.
he's not saying in the middle of a real estate transaction, don't
Oh,
go
got
open
it.
a
Okay.
Macy's card.
Gosh, yeah.
Yeah.
If you're buying a house, I'm
Yeah, no,
talking
no,
about
no.
scoring in general.
Okay.
But if you're buying a house, don't buy anything. Don't even get your washer and dryer or whatever it is unless you got some, you don't want to do it. Definitely don't buy a Ferrari at that time until after you close on your house, So
After you close, you can buy whatever you want.
exactly. And
Yeah.
I don't recommend that, but yeah, nobody's monitoring you at that point.
Right.
You've qualified. You can make your payments, but make sure you make your payments. You don't want to put yourself out.
Of course. Now, okay. No,
Okay.
that's great.
So
advice.
let's talk about what the attorney told me. You don't need any credit. Well, let me tell you what I found out. So just went through a little bit of rough stuff. And so if you're buying a home or even if you're renting one, you're going to be paying per your credentials, per what your score is, just like you talked about. It says you'll need utilities such as water, gas, cable, internet, perhaps, who knows? But your credit, if your credit's okay, they're going to turn them on, most likely. And that's what most of us experience. If you have any blemish or poor credit or bankruptcy, be prepared to put down some large deposits. It's not small. Like if you want to turn on your electric, it's hundreds of dollars if your credit
If you have
is
a poor
damaged.
credit history.
Yeah.
Oh wow.
Wow.
Well, that's only one of your utilities, right? And then, of course, to get the house, people see my credit. Well, I had to put down an awful large chunk of money up front because who's going to rent to somebody who's got poor credit or whatever the case is? So there's that. And then, you're talking about all your utilities. I needed gas, I needed water, so they all hit me. Even the cable company at the time, back then we didn't have internet, TV, whatever. But, they held these deposits for, I think, a minimum of 12 months. And so here's the hard part. I do home loans. And basically what happens is you have to be able to understand that if you're going to rent a house with poor credit, it costs me more than it would to buy a new house if I had had good credit.
Right.
That's
Right.
I thought, while you're down, you kind of get the whipping,
Right.
and
No,
everybody.
that's very true. I mean, even for your insurance too, whether it's auto insurance or home
Yeah.
insurance, there's a component of credit in that as well.
Yeah. And, it does make sense. I get it and I understand, but they don't determine timelines or mishap. And when you explain what happened with your credit, it's only taken so far. We don't, I mean, if you've got perfect credit and then there was a ding somewhere, well, yeah, we can probably work with that. But
bad credit is as much negatively affects you as no credit, right?
no credit's a little better than bad credit.
Okay.
We'll cover that. So just recently, I think I got some AT&T streaming, and obviously I have decent credit now. But the point is they said we'll give you a box and a remote, provided your credit is good. And I was like, well, what does that mean otherwise? I read on, you got to pay for it otherwise. But since I have good credit, they're going to give that to me gratis. And I was thinking, everybody needs cable service. You're selling your monthly service, but they're unwilling to extend that credit. What's funny is I recently canceled that service. Nobody collected the equipment.
You have to return it, otherwise they'll put a lien on something.
This is kind of the new app world or whatever. So it's just a little Android box and a remote. Well, they want you to keep it because
Then you can turn it back on easier.
Yes.
Yeah.
And so when you turn it on,
So it's like with streaming services, we've got like Netflix and Hulu or whatever, and like the Outdoor Channel. We don't have very much. We're pretty basic. We don't have cable, any of that stuff. We just like
see why you want to lend Dan money.
don't really have well, one, we don't really have time to watch TV, but two, like, why am I going to spend $150 a month or whatever to watch dumb stuff on TV? Like,
everybody knows how expensive TV is right now.
gosh, it's ridiculous.
Incredible. So, the point is, and I've experienced this personally, with poor credit, you pay more than everybody else. After bankruptcy, it cost me a bit more than most people to rent my home than it would to buy it, was the point here. And, I remember other things about it too. My kid goes to school, we used to pay monthly. They're like, well, we can't accept you monthly anymore because this and that and the other. So now, here I am in a rough spot and I got to cough up more, and I remember applying for aid, and they looked at last year's W-2 or last year's taxes, and they're like, "Oh, you don't qualify." It's like I'm bankrupt, but okay,
Right.
And they offered up like $200. I don't know if you guys know what tuition is in private schools right now, but I was like, you keep that and give that to somebody else. Thank you. I mean, it was a lost cause. Nobody will have any empathy for you. So we're going to figure out this credit thing today. Nobody should have to go through what I've been through. And again, it was years ago, but so let's talk about some of this stuff. So everybody needs a car, an auto. When you go out there, there's only two things you probably need to be cognizant of as far as credit. I mean, there's a lot. You need to negotiate a good deal. However, is anybody negotiating now? No. I mean, they might as well just have a price tag and a cashier. I mean,
Pretty much do.
Yeah, I was going to say they pretty much do, yeah.
Especially in the truck industry right now.
Not to beat up on salesmen, but what's their task in this, It's,
What color? What color you want? What kind of seats you want?
Yeah.
Like, and then they just got to get the vehicle, and there's no more, hey, I want this and this and this, and I want I want to negotiate a little bit.
Here's what we have. Anything in these two aisles over here, those are
right.
So the two things you want to be careful of when you're doing this, it's a situation that's less likely as your negotiation, which is also very important, but you should know what you're going to get. Back to the points here, but ask them to not run your credit more than once. Okay, does everybody understand this? Because when you buy a car, you actually, sometimes the finance manager will run it past 32 banks, and I'm being facetious here, but I've seen people who come in to buy the home and they've got 16 inquiries for one car that they bought, and it dropped their score over 100 points.
Why would they do that?
I had this situation when I purchased my vehicle. I went to my credit union. I got pre-approved because I wanted the power at that time, because it was still a market where I could negotiate. And I already had all of the financing secured. And I walked in and I told them, I said, do not run my credit. I do not want you running my credit. I've already got financing.
They still did it?
They still did it.
And so,
did you buy a car from them?
It was already I already contracted under my original, and then they ran it and they're like, well, we got a better option from the same credit union. And I'm like, no. I was so mad, but I wanted this car so bad. It was like
I'd have walked out.
Well, it doesn't matter. You already got the inquiries. You might as well get the car you want, But
at the same time, they tried telling me that it can't affect you within a certain time frame as long as it's the same exact type of pull.
Okay, 120 days. First off, that's false, and they say the same thing about mortgage. Well, if you're getting a mortgage inquiry, that won't affect you. Okay, I'm here to tell you guys that maybe it shouldn't, but it does. Okay, so
I saw it on my credit report from the monitoring company.
So the question is, how long will that affect your score? Okay, so 120 days. Now, that inquiry is not going to drop off, but it will stop affecting your score after 120 days. So
like I know that whenever we got our loan for our build, I specifically said, "Hey, here's our packet. Here's all of our information. Here's our business plan, all that stuff. Don't run my credit until." And I had one bank run my credit. After we got done negotiating with everybody and figured out who we're going to go through, that's the point in time whenever I had them run my credit. I already knew what my score was. So if what you're saying is if I would have had those 4 or 5 banks run my credit for the build, it could have dinged me down enough to where I would have bumped a rate or something?
I'm going to tell you yes.
Okay.
Yes. And that's one of the things. And so if you're looking at does anybody look at their credit monitoring? We're going to get to that too real quick here, but it's good to be cognizant. I get the little things where it says, boom, you got an inquiry. Well, there's soft pulls and there's hard pulls on the credit. So, So basically, it's one of those things. So the other thing is when you're buying a car is your credit score is going to determine your risk. Okay. So let's go ahead and go to the third thing. If you're buying a car, what Jacqueline did was prudent. That's the right way to do it. Secure your funds before you go. Go ahead and call around, figure out what you're going to do, what you're going to spend, what your max is and everything else, and go out and try to achieve that. Now you do have a little bit of a bargaining chip, even if they're being non-lenient on that. It's like, look, my approval is for this amount. Be surprised how many times, it might work now. Now there is a little bit of negotiation because you pull that up. Yeah. So that's the right thing to do. Okay. So with that, now I'm with a small community bank here. So I went to the dealer, and it was a day I didn't expect to buy a car. It was a Saturday, and I said, I'm going to wait because my bank is who I'm going to use, or I'll pay, cash for this thing, whatever we're going to do. Well, they said, here's the situation. They said, what bank is it? And so I told them, and this isn't a plug, but it was First Community Credit, which is here in our.
Yep.
So I gave them the inquiry speech. I said, okay, I'll let you do this as long as you can place it there. So they placed it with First Community. They had them on their sheet. Yeah. Well, in the meantime, this worked out perfectly because I'm waiting for, a check for the previous car that I had. So that allowed me to do my transacting. But I thought that was a cool thing. You can ask them if they work with,
I didn't know that.
With your bank. Yeah. So, and if they don't, sometimes a manager can call, and get it handled for you. But anyway, so that kind of covers auto, and there's not too much to look for, but your credit is going to determine your risk, but you can do that ahead of time. Do your homework. So standard credit loan services for people. Let's talk about the monitoring real quick. A lot of people use Credit Karma. Okay. And Credit Karma is a great monitoring service. I think it's powered by, they have a Vantage 3.0 or something like that. And it's a model where they take the algorithms. And I think it's one of those things where people need to understand it is a model. So when I pull the credit, I'm pulling 3 repositories, which is called a tri-merged. And it's going to have the real credit on there based upon the dates it was last recorded. Well, my Credit Karma is a lot higher, this is a difficult conversation to have. And it's like, well, that's based on a model.
Right.
So is Credit Karma the Zillow of credit world?
That's probably a fair analogy. Okay. That's probably a fair analogy, and in some rare cases, it's going to be spot on.
It's your credit score-ish.
Right.
Right.
But the monitoring is good, and they do tell you when you get an inquiry, and they do tell you, what you should look at. I think it's good. There's other ones out there. I don't use that one. I use ones that are issued. Check with your credit card company online and see what you have there. And they'll give you those alerts, usually free. So
Nice.
everybody knows I always say gratis, but you know, it's ideal to have, you know, a scoring something to keep you.
Yeah, give you a
Right, yeah.
benchmark, let you know, like, are things moving in the right direction? Are they moving the wrong direction?
Right.
You know, is there something that you didn't know about? Like, I know that was one of the benefits of the monitoring system that I had, was there was something I didn't even know that popped up on my credit, and I was able to get it handled purely because I saw this thing come up, and I was like, wait a minute, that was never a thing.
Right. Yeah, I've got one too, and I think it sends like an email every couple of weeks or month or once a month maybe. I don't know what it is. And
See your new
say,
scores, something like
yeah,
that.
Yeah,
something
yeah.
like that. And hey, here's an alert, ding, whatever.
Right.
So everybody asks, what's the ideal, you know, credit? You know, so if we were in a perfect world, you got a house, you got a car, and you have one credit card. So you're going to score pretty high. One house, one installment, one revolving, right? As far as debts go.
Right.
We all know a credit card's a revolving debt. You know, it's basically a fixed to nothing, so it is a little riskier. An installment, well, there's a car there. There's collateral, so it's not quite as risky because Dan will go back and tow that away. But the house, you got collateral again too.
Right.
And most houses, you know, ideally 80% is the situation. So if somebody's going to fail or default on their home, you know, there's that buffer there, the extra 20% that should save the bank or whatever the case is.
That's when the PMI comes off as 80% ish.
Yeah, and if you don't have PMI, you put down 20%, right?
Right.
So they do have an 80-10-10. Anyway, we'll save that for another day.
different podcast.
Yeah. So, rule of thumb, okay, use about 30% of what your credit lines are. Okay. Now, if you're going to do a major purchase, make sure you have some offsetting credit, you know, that's going to, so that not all your credit is used. That can save you. But ideally, the sweet spot is about 30%. So when I'm shopping and I'm buying furnishings or something like that, sometimes I'll call and I'm like, hey, can you bump this line? I'm going to do a large purchase, or can you do this? Those of you that have cards, I'm going to throw some names around, but if you have an American Express, they have a little thing, an unlimited card, or even if you have a credit limit on it, you can actually put the amount in there. It might ask you questions. It might say you're good to go, you know, but, when you delve into the other cards, they don't have that. So you call them up and I want an increase. Well, if it doesn't give you the increase, talk to somebody, tell them you're going to do a purchase and say, this is why I want it. I'm not going to use all that, but I want my credit to be at a certain point. Some of the people will take that as an acceptable, you know, reason to increase your balance. Okay.
So what do you want that balance to be increased to where your purchase is going to be 30%? So say you're going to, hey, I'm going to go out and buy something and round numbers. I'm going to spend 10 grand on it. I want a $30,000 credit limit.
There you go. Or more realistically, you know, for most, you know, I'm going to buy some furniture. I'm going to spend about $5,000. I would like it bumped to 15.
Okay.
You know, why? You know, and sometimes they'll compromise. Well, I'll tell you what, you know, can we do 12? Yeah, that's close enough.
Yeah.
Thank you. You know, whatever the situation is there. Keep your inquiries in check. We just talked about that. Okay. So if you want to get something, or you're going to open a new line of credit, you know, be cognizant of when you did your last transacting. Remember what I said about inquiries. Give yourself about 120 days. So it's not going to fall off. The inquiry won't fall off. However, it's not credit score affecting after 120 days. So, well, if it is, it's very, very, very minute. So I get to look at a lot of credit. So some of this stuff may or may not be in writing. It may be contradicted, but again, I'm giving you the absolute truth here. So the difference between a soft pull and a hard pull. That's a kind of a funny term, huh, Dan? Anyway,
Happy Friday.
Happy Friday. So, what is the difference? Okay, can you guys guess?
I know what the difference is.
Yeah, tell us.
So one is like it actually affects it affects your score. The other one, the way that we talk about it with insurance is kind of like it's just like a glance. Like it's not anything that's
An overview.
yeah.
Informative. So yeah. So if you get the soft,
I'm like, it's like we're not actually affecting your score, but we are glancing by, peeking through the window.
so there you go.
What a weirdo. Peeking through the window.
I mean, why not with where you guys are going today?
So the hard pull is your inquiry. The soft pull, it is that, it's an non-affecting inquiry. And
Yep.
so some of these credit cards now offer this, and it's so cool. They'll tell you, you've been pre-selected and this and that. And if you're interested, look at it, and they'll tell you it's not going to damage your credit. Now, I will tell you this. If they issue you the credit, you will get a hard pull, but you already know you're going to get the credit. Now, this is the other thing about an inquiry. If you get an inquiry and you actually open the account, that inquiry is not supposed to be charged against you. And in my experience, it's not.
Okay.
That's interesting.
It is interesting. And a lot of people don't go this far with it. But again, I get to see a lot of credit reports. I get to see a lot of individuals repoll. I get to see a lot of individuals actually correct their credit, which we will, I guess we're one of the few companies that will actually do that, because it actually in the background costs money. But I will walk people through that, especially my first-time home buyers, to get them where they need to be so that they're conditioned to buy a home.
And
That's good.
I'm going to throw this out there. If somebody like Jim, if you call Jim and he repairs your credit, go through him with a loan, please. He just hooked you up.
Yeah, that's the appropriate, polite thing to do.
That's the unsaid portion.
Yeah.
Okay, so
So the random question, what about cell phone carriers? Do they pull your credit?
they do.
Like hard pull?
They're supposed to announce how they're going to do it, but yes, usually they will do a hard pull.
Okay.
And so I was kind of getting to that.
Oh,
too.
sorry, didn't we?
No. No, it's a good segue in, because you had asked earlier something about the difference between bad credit and no credit.
Yep.
No credit's not a bad situation. You're not assumed either way as a poor pay or a great pay.
Got it.
You're in the unknown, which is okay. So in those cases, if you were going to do a major transaction like buy a home, if you truly had no credit or limited credit, we would build your credit using, whatever it is, cell bills, gym memberships, auto utility, auto insurance is another good one. We will actually use that and add that to your credit building. So there is a way to do that. So
They can pull like if you are a good payer on your insurance.
right.
I didn't know that.
Yes, we can use all that and build your credit so that if you're in a situation, some people are like that. They've paid cash all their life and whatever else.
Right.
Well, that's not a bad deal, but we still need credit, remember?
Right.
So, and then the final thing, and I think Ashley asked this when we were talking about credit cards, was how to reestablish credit and things like that. It goes along with getting your score up, and establishing credit is the same way, but that's how you're going to get a good score, is by being cognizant of all that. Okay.
So another question. So I've got we've talked a little bit about my son who's 21. So if you're trying to help your child establish credit, or I also work with a lot of people that are being transferred for work from other countries, which again, in the US, they don't have established credit. What what are great ways for them to establish credit without being dinged on the financial side of things?
My first and foremost is go get a secured card where you post some money up front from your bank, and
Okay.
then you give them $500 or $300, whatever you can do, and then you use that card, and then you start making the payments on it. Use it for gas, groceries, whatever you're going to use it for.
Okay.
So in that case, you're pretty much establishing. Also, some of the banks will have what's called they'll have a CD for you. So say you want to do a $2,000 CD. So you go in, you don't have the money, but you're going to make monthly payments toward that. They'll give you a monthly amount, you make the payments, and at the end of the terms there, they'll give you back your money and some of the interest that it earned.
Okay.
So that will also establish credit for newbies or people who, want to do
That's a really
something
good idea.
that does not cost them money,
That's
Yeah,
that's a great idea.
And my first-time home buyers, I always encourage them to do that because then their down payment's ready, part of it.
Yeah.
that's
great.
great. Yeah. Good. Good insight.
Awesome.
So I know that was a lot of information, but
No, I think
that's pretty much the
Valuable.
scoring
Very,
thing.
very valuable.
Yeah.
Very much so. Yep.
Okay, that is what I have, and there's always good questions that come up, and everybody knows how to reach us. So let's wrap it up there, unless there's any questions.
Yeah, Jim, give us your best contact if somebody had questions about their credit or maybe going down the path of wanting to get a loan and they wanted to get some insight from you. How would they reach you?
They can either call me 636-236-9263 or email jimgrassopodcast.com.
That's it, your Gmail account?
That is my Gmail account. I'm sorry, gmail.com. jimgrassopodcast@gmail.com. Thank you.
Awesome. Well, that was a really good podcast.
Yeah.
I learned a lot. So thank you, Jim. I really appreciate that.
Well, thank you
Good.
very much. I
Good
hope
info.
everybody has a better idea and their credit looks so much better this time next month.
Absolutely.
Catch you guys next time.